get into futures, you can get into options, you can get into crypto, whatever you like. But have one source of plays where you're confident that you can consistently make money if the other things go wrong. So for me it was a momentum day trading, and of course I lost money for initial 3 years, but after that 3 years of
Hello, my name is Andrew Aziz, the author of How to Day Trade for a Living. Welcome to my channel.
All right, guys. Good morning, everybody. Good evening, wherever you are in the world. So I had a pretty good day today. We traded Tesla very nicely, both long and short. And I had a loss on PLTR, and I also had a very nice trade on PLTR on options, but I chickened out and it just blew up. That trade would have been like a $50,000 trade by now, buying 65 calls for today. I'm going to go walk you through that. And these are my positions. I also have a little bit of TQQ. I started buying some TQQ for a reversal and it kind of dropped on me, and I'm kind of holding it and see what's going to happen. So let's see what happens. But this is the overall trading situation that I have. So it was a pretty good day. So Tesla at the open, it was, was gapping up a little bit and then sold off. It was a previous day close. When you look at the daily chart, it wasn't, after the election, obviously November 6th, you rallied up, but nothing stays like this forever. It comes down. And, that's one of the rules of trading is reversion to the mean. You always have to come back to your moving averages. These kind of massive moves are not sustainable. It doesn't matter. Like even we had this back in November 24th in their earning, popped up. You have to come back to your moving averages and then slowly continue going up if you want to go up. So Tesla came down right at this is very interesting, right at the 9 moving average on the daily chart. Do you see that? There's a huge bounce from that. And when you look at it on a 1 minute chart, that was exactly what happened here. So really crazy bounce here, which is a heavy volume. So that was a bounce from that. But before that, we're getting in there. So at the 1 minute, the volume came up above the VWAP. I didn't take the trade because I wasn't really sure if Tesla is going to be choppy or something like that. So even though it was a very nice bullish engulfing, I was thinking of taking that trade, but I didn't. But I was, do I want to take that trade or not? But as soon as I saw that this volume continues and this candlestick becomes so bullish, I went long heavy on that, popped up to 316, and then I got stopped out here. So this is my first trade, and I let this one goes back my break-even point because I was just an idiot. I thought maybe it comes back. So I gave some of the profit back here. And then I flipped my position to the short because I realized that now 5 minute becoming a bullish engulfing. So I went short from the green to the red and then down partial here and then suddenly squeezed back up. And again, as I mentioned to you, this is a daily chart, a daily moving average, a nine moving average on a daily chart. And I got to stop that. So that would be my second trade, which I made money on that. Not as much as I was hoping, but it was very nice entry for me. If I want to walk about the risk to reward, so this was my entry, this was my risk. First R, second R, probably 3R I got out of that. So the risk to reward is super important. And then I got to stop at the bounce, the rest. And then after that, I think I flipped my position one more time long, yeah. So after it came back up, so I went long again, up the consolidation, hold this. So this was some sort of a signal. The volume came in, I went long, added more for the break of high of the day, partial, but I shouldn't have partial, added more again, and then really good profit here on the way up. Came back up, I added more for another break of 320, and then we got into the choppy price action. Paris, which I'm going to show you his discussions on this after this recap, he continued building his positions around here. He added a 316, and then he got the next pop-up at 320. So popped up 320, I got out, and I got stopped out everything at the break-even. So the last trade was really nice. However, as you see, Paris after me, Paris really built his position on this pullback, was getting ready for the next pop, and he did. Made really nice profit on that. What else we traded? PLTR was a very nice trade today at the open. So I was watching it. Unfortunately, I missed the boat on PLTR. It was a very nice 1 minute range breakout, and PLTR again on the daily chart making all-time high. This is a post-election play. PLTR is a defense company, so they probably get a lot of government contracts and stuff for security and defense. So as you see, moves up. It really broke the all-time high one more time again. Unfortunately, I missed it at the open. Then I went long, tried to get this breakout. It kind of had some funky price action. I got out of it. It came down to the VWAP, a little below the VWAP, and then boom, again, it went up to, look at this volume. Look at the volume. It's just completely now it's breaking above. I traded that on I bought some 65 calls at very little price. Let me see if I can actually bring the chart here. Yeah, I saw that. Yeah, here it is. Let me bring this one uh, here for the things. So the 65 calls, I bought them like 5 cents, 4 cents, or something like that. That's 10 cents. I got out of it. It dropped, and look at that. Those are like right now trading at 66 cents. So essentially, you could essentially trade the the calls on 65 calls on that. It was a very very nice trade. Paris traded Tesla. I'm gonna actually Paris. We're gonna edit your session and putting it here because I think it was a very nice session. Um, so as you see, Paris did that same trade as me here. Entry, let me change the color. So entry was very similar to me, partial, and then his ads were very nice. And then he eventually got stopped out, same as me. And then he dropped, took the trade short. He didn't trade the first 5 minute trade that I did. So very nice. So we're gonna actually now put the Paris recap. Paris then did this session about how to add and manage your position. He did it live on YouTube. We're gonna cut that part and we're gonna add it into this recap just because I think it was a very good session. So we just want to make sure that everybody sees that later for future. Well, thanks a lot, guys. I still have this TQQ. I want to see what this TQQ is doing. So I'm kind of leave it down on it, but market is selling off because, again, as I told you, this after post-election plays are have to come down. So as you see, November 6th, Qs popped up, went all the way up to 516, and now it's gapping down back to the pre-election trading range. You might continue going higher, but again, you can't expect the indexes going up like that.
I think I traded short on the long side on both sides today on Tesla. But the key thing that I want to talk about is, adding to a position is actually a skill. It's just not you have to understand the price action. You have to understand the right area of it. One of the big advantages of the price action, so the adding, is you can maximize your existing profits or profits on the existing trade. But the disadvantage of adding to the position is messes up your average. So you have to be very very careful in adding to your position, but it is very rewarding once you learn the art of adding to a specific position. Like in today's trade, it's not a great example, but if you look at my this trade, when the stock turns right in your favor, then is what is the area of you adding. There are two ways that you can identify. One is the price action. One is the price action where for this was the high, this was the low, and once it breaks out of the high, the most basic thing of a price action standpoint is it comes and retest the resistance, comes the support. So one of the very basic idea of adding at a good area is understanding where the breakout happens and where you can add back at your retest areas. So that's one case, but it's not always always it does accurately, as you can see in this Tesla trade where I added right here. I think I added more, and this was the area. But sometimes what happens, it would dip below it and then bounce and then starts holding and then goes higher. And that's where you have to understand that how do you pinpoint to your positions when things like these, like this area, there's no reason for me to like from a price action standpoint, I cannot tell if I should be adding here. But the reason I added here, because I saw the buyers holding and stepping up. And when I see a buyers holding and stepping up, I definitely want to go aggressive for the breakout of a new high of the day. And this could have easily gone to 323, 324, but it didn't. And it popped up and again it sold off. 320 was a seller. It then completely changed back to the, below the important support area that it was trying to hold. When things like do change like that, the basic thing you want to do is just get a stop out. There's nothing wrong with getting stopped out at break even. And this is where your break even, the ads, the number of size that you want to take at these areas, you should not go aggressive enough that it messes up your average, because you always want to think about where are you wrong on the trade. And my question was, when I'm long here, I am wrong on the trade if it breaks this support area and closes below this. And if it does that, I'm wrong on the trade. There's no reason for me to be holding that trade on this. And so my ads, my this ad would be more aggressive than these three ads, because if I go aggressive on these ads, it would mess up my average. So I would always go aggressive at these ads, which is very close to my price and very close to my stop loss areas. But I will go smaller size when I am a little away from the area that I'm thinking that I might get stopped out. And this area was 346, 3 sorry 316.52 was the area I was thinking I'll get stopped out. But now when the character of a stock changes like this, like you see this, the volume changed and everything, then the next best thing is I was short biased on a stock. I was not long biased on a stock. But and the only thing was that I'm gonna trade these two levels, where I'm gonna trade these two levels. I'm gonna short below 311, I'm gonna long above 313.16. That was the levels, but now there is more level that were formed, which was 316.52, which was during the day's time. And if that happens, I'm going to use that to my advantage. And if the character of a stock changes and my bias was on the short side, let me see and then take a short on the downside. I was thinking if it go to the low of the day, and I still think Tesla has a 300 place in it, and Tesla has a chance to go to 300. And that's why I shorted it. It did drop. And now what is the good area for a pullback? This pullback below the VWAP were the areas of me trying to add to the position. Now, even though my ad is there, if this works out, that would give me a very high risk reward. But even though it doesn't, I'm adding very aggressively close to the VWAP. And if it closes, my stop loss, I'm always thinking, where is my technical stop loss? My stop loss is if the candle closes above the VWAP, and if it holds that above the VWAP, that's my stop out. And that's where it was exactly at the break even area. So you're always like, people who go short, go for long, or look for the break of low of the day and have a direct target, in these cases you will literally stop out either at break even or not make any money. But even though this trade did not work out for me, I still made money on it, because I was able to scale out and scale back in when it was in my position and got stopped out at break even at a technical stop out. And that's the beauty of getting in, scaling out, and adding back in, and keeping that market cycle in place and intact to your advantage, and riding the entire wave out of it, keeping that core position in intact. And that's the beauty of adding to the position, and scaling out, and keeping your register ringing on a daily basis. And one more example that I want to take for today is the yesterday. I think Andrew also included that in his newsletter. Is yesterday's was Nvidia chart where Andrew also took that position, and this is where you scale out, load back in at these areas of the beauty of ads at these areas. I would give 100%, of course, on the price action as well as on the tape, because I could have easily added here, I could have easily added here, I could have easily, because this was the opening price, I should have added here. But why did I go add here, and why did I kept adding these spaces? Because I was able to see buyers on the tape. You want to see those buyers, and it's not it's not just a luck that I'm always finding the literally the areas where it starts breaking out from. It's just not it's just not a luck thing that happens. You want to see something in front of you to be able to capitalize on your ads, and then the stock immediately moves in your favor when you do that. And that's so price action is one thing that you would understand the area, but tape is the one that will help you add to to your position at the right entries. And if you add at the right entries, that's what it would give you an edge, because it would save you from messing up your average, and you should be able to ride the whole entire move of the stock, or rather we call it as a meat of the move. So yeah, that's something that I wanted to talk about. And it's a skill you want to develop over time, and you want to understand what are the right areas that you want to get in, what is the right buyers if that I see, where do how much size do you want to take. It's a skill, it takes effort, but once you overall able to do it, even though you on a losing trade, you will still make money. And that's the beauty of it, like we
Nice.
did today on Tesla.
Paris,
Yeah,
this is what I found. Generally, I think it's as an educator, I'm telling this to everybody that do not add to your losing position. Never, like,
true.
just close your eye and then put this mantra on your head that you add only to your winning trades, like when the trade goes into your direction. I think it's very important for people to have this religious rule, like as much, it's just like your life depends on that. However, I see that sometimes you add when the price goes in the pullback. I've seen it. Am I right? Or if it is,
Yeah.
how often you do that?
So very rarely I do that, but sometimes what I start with is, sometimes I nibble on a position. I'm not sure, 100% sure. So there is a difference between averaging in and scaling in. So averaging in means you had a stop loss, it dropped your stop loss, and then you're still trying to come to your average point. But scaling in is that when you get in, like for example here, and you have a plan that, okay, if it comes back here maybe 313 area, and if I still see buyers, I would scale into the position. And you start nibbling, you're not sure about the stock, you think it's going to go long, but you are not that sure. You nibble around, but when you get a confirmation, then you scale into the position, and you still have a technical stop loss in mind. And I would still get stopped out, but I would scale into the position if it drips a little bit, but would not let it go against me by a lot.
Yeah. That's very important, guys. Remember that. As honestly, I say, as a new trader, forget about this. Like, this is, you got to be very confident in your decision making, very confident in your gambling attitude or mentality to do this. Overall, I think traders are better to have this religious rule that never add into a trade when it goes into your, against your direction. Let's get some questions from you. So, how do you, someone, Ivan in the chat room is asking, how do you see buyers on the tape? Are you looking for big bids on level two? Can you show examples? So, Ivan, I make a comment first before handing it over to Paris is that uh, so the level two, I think the level two and the tape are a little bit different. The time and sales, some people call time and sales tape, and tape reading is essentially what is coming into the time and sales. Level two is a little bit different. There are two different ways of reading. Paris has a course of how to read actually the tape completely, and I've seen only great comments about that. So, like, I've never seen anyone who says, "Oh, it wasn't worth my time or my money." Just you find one, thing from it, and one trade it actually makes what you good on that. But it's for if you want to know about level two. I think we have a lot of videos. If you search on YouTube about level two variable traders day trading, there's a lot of videos with live examples that I will recorded doing live trading in there. And if you want to know about the tape, always check out Paris course. I think we're gonna have also a really good discount on for the Thanksgiving and Black Friday. Paris, hand it over for you to that question.
Yeah, absolutely. So the way we call it as a tape is a combination of time and sales and level two. Time and sales is are the real transactions that are going through where a buyer is meeting a seller. And level two is the order book where the orders are actually waiting in the queue to be filled. They're not filled yet. So there is multiple ways you can identify. So first of all, time and sales does not lie. Time and sales will be the real execution. They are the people who have buyers have met a seller. Level two, there is a chance that there is a spoofing involved. There is people are trying to just bid the orders just to manipulate the prices. But majority of the times, level two will still hold some reality towards it, that if the price you show a big buyers or a big seller, you would still see those the price move to those buyers or sellers. But identifying a buyer is, you see these the prints that you see in front of you. They're white prints, they're red prints, they're blue prints, they're green prints. There are, the way that transactions happens on the time and sales tells you a lot of information, that if the buyer is stepping up or if the seller is stepping down. And if I see, like for example, if I see all the red prints and they all keeps decrementing, that means that the sellers are actually taking over. They're hitting the bids, they're hitting the bids. But just mind you that red prints do not just mean sell. If I see a red in color, doesn't mean it's a sell. You have to understand the perspective that it could just be a patient buyer who is just waiting for the bids to be, it's holding the bids and trying to step up. So greens do not mean a buy. So you have to say the multiple concepts that you want to understand to get an idea to identify with certainty if that the buyers are trying to buy or the sellers are trying to sell. So there are a lot of concepts involved, and I absolutely check it out. If you are a part of the BBT, check out the education center to get an idea what tape is. And if you are a part of, if you from YouTube, if you want to check out the course, go to Trading Terminal and look for the Reading the Tape course. It's a 15-16 hour course that you want to check that out. It's a whole different concepts with real time examples on how you can apply both the time and sales and the level 2 concepts.
Yeah, it's a pretty good course. I know you spent a lot of time on it, and it's the most comprehensive course on reading the tape. I know SMB Capital has one, and I've seen it a few other places, but yours is in a different level. And the good thing about you is you keep updating it, and
Yeah.
on the Sunday mentorship sessions is also recorded. We post it on Trading Terminal, so constantly materials are being added in that. So I highly recommend to people. I don't want to push you toward buying it, but I highly recommend doing it. I wish I had the course. If it was my course, I would have given it for free for everybody. Like, I'm not really thing, but Paris has spent a lot of time and energy on it, and it's not only just a bunch of videos. It comes with the mentorship, comes with the support, comes through that, and that's how trading is. You don't learn by just watching a bunch of videos. You learn by practicing it properly. Any other question? Let me see. Question for Paris. Anything about tape reading? Anything about life in general? Paris, what did you notice specifically? So so Ivan is asking another question. What did you notice on the tape when you added on Tesla? It's a good question.
So what I noticed was, in this particular case, the first ad that I saw was actually a Hellbit scenario, but in this case there was no people who do not understand Hellbit is basically when the buyers are trying to hold on the red prints. But on this particular case, when I got aggressive, I saw a white print confirmation. There were all of white prints just processing with a very good volume in this case, and then immediately it literally popped like $2.50 in a matter of seconds. And when white prints are trying to get in, that means the institutions are trying to transact, or the algorithms are trying to transact between the bid and the ask. So once I get that confirmation, that's usually an indication that the price is going to go higher, and and it was a very good chance that it goes higher. But however, you also want to understand the psychology of the market. Let us say a buyer is wants to buy and move the price of a stock of a Tesla to 325, but let us say he has uh, you know 5 million shares. He would be very aggressive in moving the price very quickly because he wants to just get the order filled. But let us imagine that this buyer doesn't have a 5 million shares, he has 100 million shares. And within 100 million shares that he needs to transact, he can actually manipulate the price. He doesn't have to go straight up. He can actually bring the price down, trap a lot of sellers, trap a lot of buyers, then starts moving up, and then he can continue, and then eventually he'll reach the 325. So you want to the psychology of the market participant is plays a very important role. You want to understand that the transactor, or even the institution who's transacting, how big that institution is, or how big of an order that is he processing. If it's really big, you can imagine transactions to be more choppy, because he can control the float of the, the way the transactions are happening. He can control, he can trap a lot of people, he can put, start selling off, get a better price, then stay back up. And that's where you can identify the buyers has a much bigger order to fill, and eventually at the eventually later part of the day he would be aggressive, and then go to that 325 level or whatever that level is at a later part of the day. But at the open, it would try to trap here and there. But on the other side, if it's a small size, they would be aggressive, they would be done in the first, first half an hour, 1 hour. Usually that's what you see in the first half an hour, 1 hour. There are institutions who want to fill the orders, and they just the breakouts happen, and then they continue going higher or lower. So in this case, it seems like today Tesla has there is a big order to be filled, and they were here to trap a lot of people, and then they'll eventually go higher. Uh, and yeah, and that's how the market psychology works. You always want to see how aggressive they are, how, and that's what tape tells you. To be honest, like with the white prints, the transactions, and all of that, it tells you. But you still want to manage your risk, so you are supposed to manage your risk. You cannot just blindly believe that this is going to happen and then wait for the entire stock to or position to hold. You have to get out, get back in later when the opportunity arises again.
I like that. That's amazing. What else? Any more questions? Yeah, PLTR calls. I'm looking at it. I bought the 65 out of the money calls, and it's now blowing up. I got out of it with a loss. So let me ask you questions. Anything in the chat room? Uh, I like that. AGC, would you mind sharing how you both grew your trading account so quickly? Is it based in mainly day trading or swing or both? I don't know about Paris' account. I don't know even about his share size and stuff. But for me, uh, pandemic was the time that I really made a lot of money on that. And CCL, United Airlines, UAL, American Airline. These are the ones I made most of my money in the travel sector in pandemic. And in that time, I even wasn't trading TQQ and stuff. I didn't know about that. Like, it's just, I didn't know about how crazy TQQ and stuff can be in that. That's how it is. Then my account got bigger. Now I'm holding this big VOO position, which is the S&P 500. So I'm collecting about $100,000 just dividend from it, like every year. And then with the excess margin that I have, I day trade on that. So my account is like right now is 7.785, and then my buying power is about $22 million. So you can trade on the excess margin that intraday Interactive Brokers is giving it to you. So you don't even need money. So that's what go. Paris, what do you think? How do you answer to that question? How's your account
Yeah,
doing?
so one of the things that I do recommend, that master at one thing first. If you like day trading, if you like, master at, do not step into, I want to option trade, I want to income trade, I want to get into multiple things at the same time. It's just going to lead to like failure in all of them. So master at one thing first, create a consistent generation of a revenue at one thing, and then expand your horizon. The finance industry is big, the stock market is big, you can get into futures, you can get into options, you can get into crypto, whatever you like. But have one source of plays where you're confident that you can consistently make money if the other things go wrong. So for me it was a momentum day trading, and of course I lost money for initial 3 years. But after that 3 years of regressive learning and all of that, I started making, then my growth was exponential. That's when it's involving incorporating tape into the picture and everything. So still my bread and butter of trading or revenue generation is through day trading, on a day, like these momentum tape trading and day trading on a daily basis. I still have different areas that I trade, which is through income trading through options, and I have just to generate consistent income, and of course on the investment side. But majority of my profits come through day trading. But I
Yeah.
highly
So
recommend mastering one thing first, and then increasing your horizon.
That's a good point. This is very important, guys. The options trading, you got to know the basics of trading first. You know, if you want to, especially do the day trading options, you got to know the price action because these are derivatives. You know, the real price action is happening on the stocks, and the stocks are kind of the basic elements of trading. Even in the finance, it's just rock bottom. The equity traders are the rock bottom. You know, as you get more sophisticated into the world of professional trading, they go into the options and bonds and swaps, and it gets crazier and crazier, crazier that I don't know what it is. But the basic is this one. If you can't read the price action of a Moderna or Nvidia or Tesla intraday, how do you want to day trade options on that? Because that's at one level of sophistication. Now risk management is the important, the selection of the strike price and everything. Now you have another element of time decay in there. So Brand is
But
asking a
yeah,
very
and you
good
don't.
question. Sorry, just I'm saying that one. I give it to you. How do you get through the slump when you feel like you suck at this and frustrated? Um, what do you think about that? And previous comments.
Yeah, and there will be a lot of times where you would feel that I suck at it, and especially on the losing days when you mess up on the your psychology is not good, and you blow up your account and all of that. Especially on those days where you think that you suck at it, but you want to give, like, you want to ask yourself how badly do you need it. If it's bad enough, you'll find a way to do it. If it's not bad enough, you'll find a reason to quit it. So. Uh, but ask yourself on how badly do you want it, and you'll find a way.
I wanted this so
Yeah,
bad. The lifestyle
yeah.
that I'm having was my dream, and I want it now. I don't want to be, 75-year old and have all the money and stuff. I want it now. I wanted to climb. I wanted to travel. I wanted to do this, but however, I got lucky. The luck was a very big element of my life. You always have to have a very, really good expectation about what you want to achieve it, when do you want to achieve it, and sometimes you got to stop it because that's the definition of insanity. If you keep doing over and over and over, and then you don't get the result, then you don't evaluate yourself. Always
So
have
one of the things
someone.
that I did,
Yeah.
sorry. So
Go
one of the
no
things,
go go
Andrew.
Pat.
So one of the things that really uh, worked for me is I was in a full-time job. I was still in the software industry, and and I was losing money year over year. First year lost, second year lost, third year lost. And then I came up with a thing that I loved stock market and day trading, so like this stock market so much that I come to a consensus that uh, on my deathbed, if I ask myself that this is something that I really wanted, and if I quit right now, I've not been profitable for 3 years. If I quit right now on my deathbed, what question would I be asking? And the thing is, had I tried 5 years, had I tried 6 years, I would have still be a happier person. And one of the things that I come to a consensus was that even though I do for the rest 50 or 60 years, and if I lose for the and for all of those 50, 60 years, I'm still okay with it. At least I did what I loved, and I had a specific dollar amount allocated from my job, and job was paying very well, so I was putting 20, 30,000 that I can easily lose without impacting my day to day bills payment or anything. So I had that consensus that okay, I'm okay with this, even though if I lose 50, 60 years. But and that's what kept me going. It's like I'm okay with it now. I don't have a pressure to perform. I'm able to think it in a more a more practical manner of what are the things that I can do to get better. And then eventually fourth year and fifth year, it just now it's a history that I was able to quit the job and everything, and now trade full time, and make trade with a big account. And that's how you want to ask yourself, how badly do you want it, and are you okay? Like what is gonna make you happy? Even it's okay, I was still happy, I was still able to trade even though I was losing money. And you have to come up with that thing, that what makes you happy, and if that makes you happy, go for it.
Uh, Also, people are in a different stage of life. That's also very important to understand that. Like I mentioned that multiple times. Like Paris is pretty young. I don't think you have kids. I'm also, when I started trading, I was pretty young and, very supportive ex-wife, and everything is in there. People are different stage of life, because a lot of people in our family, in our community, they have families and kids and stuff. So you don't compare yourself with other people. You always have to look where you are and what is best decision for you. Like I've seen people that they want to learn, and but just they can't lose money because that's the money for their family. Like Ed is my buddy in London. I had a meeting with him one time a few years ago, and he asked me this question: that this is my family money, but I just can't go through the losses. And how do I, fix this dilemma between me that I have to take losses and risk for the benefit of my family? It's a valid question. One way of doing it is that going through this funded account that we have. Majority of you are going to lose money, but that's okay, because I like you to go and lose in this funded account rather than go and open up account with CMEG or Interactive Brokers or TD and lose money there. Because if you can't pass this one, how do you expect that in a live account you do better? And I think it's a very, very good program that we define. It's probably the best program that we launched this year. Is this $50,000 funded account? Maybe I introduce another bigger one to $100,000 or $200,000, just to walk you through how the real trading under simulated conditions, like real fear and greed and anxiety and everything in there. So I think one way of doing it is, if you want to go through that, go through this funded account, go through it multiple times. And if you can't make money, maybe trading is not for you. I know everybody wants the lifestyle, but maybe it's not for you. Like, it's not for everybody. This environment is not for everybody. It's very dangerous environment, and not everybody should and would be a trader.
I agree 100%. It's about sometimes you want to take a call that maybe it's not the right thing for you.
Any other question from Mr. Paris? I'm
What?
41. Paris, I think, is much younger. Paris, you're not even 30, huh?
No, no, no. I'm 35.
Oh, you're 35. Any other
That's
question before we wrap it up? Thor wants to come and say, hey, boss. ELTR is going like great. ELTR, it's
Yeah, I don't
8%.
know.
Yeah,
My camera is working. For some reason, it's not
It's
portraying.
okay. It's 11.
Yeah,
it's 11 anyway. So, guys, thank you so much. And all the best. Thanks for YouTube, guys. Thanks for your support. Thanks for liking. Thanks for bearing with us sometimes in the technological challenges. We are just a bunch of degens trading. We're not really like Bloomberg or professional TVs. And I love that. Like, I'm in underwear, like trading. So I love that. That's how we are. Real traders in their underwears. All right, guys. Thank you so much,
awesome.
and see you on YouTube. And goodbye.